ExamPrep.School. Massachusetts Producers Exam for Life Insurance, exam code SERIES 16-51. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Annuities, federal tax considerations for life insurance and annuities, general insurance, insurance regulation, life insurance basics, life insurance policies, life insurance policy provisions, options and riders, qualified plans. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. In Massachusetts, an applicant for a resident life insurance producer license must complete a state-approved pre-licensing education course consisting of at least how many hours? A. 18 hours. B. 20 hours. C. 22 hours. D. 24 hours. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is B. Massachusetts mandates a minimum of 20 hours of state-approved pre-licensing education for life insurance producer applicants before exam eligibility. Reason A is not correct. This option understates the requirement. The state specifies at least 20 hours, not 18. Reason C is not correct. This option overstates the requirement. The minimum is 20 hours, not 22. Reason D is not correct. This option exceeds the required hours. The state minimum is 20 hours, not 24. Question 2. Which of the following documents is required to be submitted with an application for a Massachusetts resident life insurance producer license? A. Corporate surety bond. B. Personal financial statements for the last 2 years. C. Copy of a high school diploma. D. Completed fingerprint card. The correct answer is D. A completed fingerprint card is mandatory to conduct the required background check for all resident producer license applicants in Massachusetts. Reason A is not correct. A corporate surety bond is not required for an individual resident producer license. Reason B is not correct. Financial statements are not required for individual producer licensing in Massachusetts. Reason C is not correct. Educational diplomas are not part of the licensing documentation requirements. Question 3. A life insurance producer residing and licensed in New York is appointed by a Massachusetts insurer to solicit life insurance in Massachusetts. Under Massachusetts reciprocity rules for non-resident life producers, which action must the producer take to obtain a Massachusetts non-resident license? A. Retake and pass the Massachusetts life insurance exam within 60 days of appointment. B. Complete Massachusetts pre-licensing education requirements before any solicitation in Massachusetts. C. File a temporary non-resident license application within 90 days of the first Massachusetts sale. D. Submit verification of the New York license and pay the Massachusetts non-resident licensing fee within 30 days of appointment. The correct answer is D. Massachusetts grants reciprocal non-resident licenses when producers submit verification of their home state license and pay the required fee within 30 days of insurer appointment. Pre-licensing education, temporary licensing, and exam retakes are not mandated under these reciprocity provisions. Reason A is not correct. Non-resident producers licensed by reciprocity are exempt from retaking the Massachusetts exam. Reason B is not correct. Massachusetts does not require pre-licensing education for non-resident producers licensed by reciprocity in another state. Reason C is not correct. There is no temporary non-resident license period. Reciprocity requires direct application and fee submission within 30 days of appointment. Question 4. Which of the following actions falls within the general regulatory authority of the Massachusetts Commissioner of Insurance? A. Recommending amendments to insurance statutes in the state legislature. B. Adjudicating contract disputes between insurers and policyholders. C. Approving insurance policy forms prior to their issuance in the state. D. Setting the statutory premium tax rates for domestic insurers. The correct answer is C. The correct answer is approving policy forms prior to issuance, as Massachusetts law requires the commissioner to review and approve all insurance policy forms before they may be used in the state. Reason A is not correct. Recommending statutory changes is advisory and not part of the commissioner's formal authority. Reason B is not correct. Resolving contract disputes is the role of the courts, not the commissioner. Reason D is not correct. Premium tax rates are set by the legislature, not by the commissioner. Question 5. Which of the following investigative powers is expressly granted to the Massachusetts Commissioner of Insurance under state law? A. Arresting executives of domestic insurers for failure to file required rate information. B. Administering oaths, examining witnesses, and subpoenaing books and records of persons under investigation. C. Issuing search warrants to inspect producer premises without obtaining judicial approval. D. Suspending a producer's license without providing a prior hearing. The correct answer is B. The correct answer is that Massachusetts law authorizes the commissioner to administer oaths, compel witness testimony, and subpoena documents and records during investigations. Reason A is not correct. Arrest powers belong to law enforcement agencies. The commissioner lacks authority to arrest individuals. Reason C is not correct. Search warrants require a court order. The commissioner cannot issue them independently. Reason D is not correct. License suspension requires a hearing to satisfy due process. It cannot occur without prior notice. Question 6. Under Massachusetts Unfair Trade Practices Law, which action by a producer or insurer is defined as misrepresentation? A. Failing to disclose material policy exclusions or making false statements about benefits. B. Offering an unauthorized rebate or inducement to a policy applicant. C. Using disparaging remarks about a competing insurer's policy to influence a sale. D. Issuing life insurance policies before obtaining the commissioner's formal approval. The correct answer is A. The correct answer is failing to disclose material exclusions or making false statements about benefits, because misrepresentation under Massachusetts law specifically covers untrue statements or omissions of material facts. Reason B is not correct. Offering rebates without authorization is prohibited under rebate regulations, but falls under rebating, not misrepresentation. Reason C is not correct. Disparaging a competitor's policy is a form of defamation or unfair competition, not misrepresentation. Reason D is not correct. Issuing a policy without approval is doing business without authority, a separate violation. Question 7. Which of the following is an example of false advertising in the sale of life insurance policies under Massachusetts law? A. Stating that policy dividends are guaranteed despite being dependent on the insurer's surplus. B. Representing that policy loans will accrue interest at the contract rate. C. Disclosing all policy fees and charges in the advertisement as required by regulation. D. Indicating that policy cash values will accumulate tax-deferred under current law. The correct answer is A. The correct answer is stating that dividends are guaranteed, because dividends on participating life policies are not guaranteed, and such a claim constitutes false advertising. Reason B is not correct. Describing loan interest at the contract rate is accurate and compliant. Reason C is not correct. Full disclosure of fees and charges is required advertising practice, not false advertising. Reason D is not correct. Explaining tax-deferred accumulation is true for life policy cash values. Question 8. During a licensed producers networking event in Massachusetts, one producer tells a potential client, "I have insider information that another insurer here is on the brink of insolvency, and will likely default on policies soon, even though that insurer's financial statements show strong reserves. Which statement best describes the legality of this behavior under Massachusetts insurance regulations? A. It is permissible because the statement reflects the producer's personal opinion about the insurer's future performance. B. It is prohibited defamation, as knowingly false statements about a competitor's financial condition harm their reputation. C. It is allowed as long as the producer did not intend to injure the insurer's business. D. It is lawful advertising since the producer is free to discuss competitors in any context. The correct answer is B. The correct answer is based on the prohibition against knowingly making false statements about a competitor's financial condition, which constitutes defamation under Massachusetts insurance law. Reason A is not correct. Expressions of opinion are not a defense when the opinion is presented as factual, knowingly false information about an insurer's solvency. Reason C is not correct. Intent to injure is not required. Making knowingly false statements that damage reputation is prohibited regardless of motive. Reason D is not correct. Advertising rules do not override the prohibition against defamation of competitors through false statements. Question 9. In insurance terminology, pure risk and speculative risk differ primarily in which characteristic? A. The origin of the risk from moral hazard or physical hazard. B. The ability to transfer the risk through reinsurance. C. The requirement of a contractual obligation to assume the risk. D. The presence or absence of a chance for financial gain. The correct answer is D. Pure risk involves only the possibility of loss or no loss, whereas speculative risk includes the possibility of gain as well as loss. Reason A is not correct. Moral and physical hazards relate to sources of risk rather than whether a risk can produce gain. Reason B is not correct. Referencing reinsurance conflates risk transfer mechanisms with risk classification and does not distinguish pure from speculative risk. Reason C is not correct. A contractual obligation describes risk transfer requirements rather than the intrinsic potential for gain or loss. Question 10. An actuary at a life insurer compares claim experience over 2 policy years. In year 1, there were 1,200 claims on 800,000 exposure units. In year 2, exposure units doubled to 1,600,000 with 2,300 claims. The observed claim frequency per exposure unit declined slightly from 0.00150 to 0.00144. Which best explains this change in observed loss frequency? A. The law of large numbers yields more stable observed frequencies, reducing variation as exposure increases. B. Mortality table adjustments lowered expected claims for the larger portfolio, affecting observed frequency. C. Underwriting guidelines were tightened for the additional policies, reducing actual frequency. D. An increase in exposure automatically disperses losses over more units, reducing per unit frequency. The correct answer is A. The law of large numbers explains that as the number of exposure units grows, random fluctuations diminish and observed frequency converges toward the true expected value. Reason B is not correct. Adjusting mortality tables changes expectations but does not directly alter actual observed claim counts. Reason C is not correct. Tighter underwriting wasn't mentioned, and doubling exposures alone does not imply stricter risk selection. Reason D is not correct. Increasing exposure does not inherently reduce per unit frequency. It only lessens variability around the true rate. Question 11. In terms of capital acquisition and ownership structure, how do stock and mutual life insurance companies primarily differ? A. Stock companies raise capital by issuing shares to shareholders, while mutual companies are owned by policyholders and rely on retained surplus. B. Stock companies rely solely on retained surplus for capital and are owned by policyholders, while mutual companies issue stock to shareholders. C. Mutual companies pay dividends to shareholders proportional to share ownership, whereas stock companies allocate policyholder dividends based on mortality experience. D. Mutual companies are structured as for-profit entities that issue stock to underwrite policies, whereas stock companies operate as nonprofit member organizations. The correct answer is A. The correct answer states that stock companies raise capital by issuing shares to shareholders and are owned by them, whereas mutual companies are owned by policyholders and rely on retained surplus. This reflects the fundamental distinction in ownership and capital sources. Other distractors reverse or confuse these roles. Reason B is not correct. It incorrectly states that stock companies rely solely on retained surplus and mutual companies issue stock, which is reversed. Reason C is not correct. It confuses dividend allocation mechanics without addressing the fundamental ownership and capital differences. Reason D is not correct. It wrongly portrays mutual companies as for-profit stock issuers and stock companies as non-profit, which contradicts standard structures. Question 12. Which of the following best describes the organizational structure and membership requirements of fraternal benefit societies that provide life insurance? A. Nonprofit member organizations requiring a common bond, structured into lodges and providing benefits exclusively to members. B. For-profit member corporations, issuing capital stock to external investors and operating under a business charter for profit distribution. C. Reciprocal exchanges offering coverage to the general public without a common bond membership requirement. D. Mutual insurers owned by policy holders at large, distributing surplus as dividends to all policy owners. The correct answer is A. The correct answer identifies fraternal benefit societies as nonprofit, member-owned organizations structured into lodges with a common bond requirement. Other choices describe stock companies, reciprocal exchanges, or mutual insurers which do not match fraternal structures. Reason B is not correct. It describes for-profit stock companies issuing capital, unlike fraternal societies which are nonprofit and member-based. Reason C is not correct. It refers to reciprocal exchanges offering coverage to the general public, missing the common bond lodge structure. Reason D is not correct. It outlines mutual insurers owned broadly by policyholders, lacking the lodge-based membership with a common bond. Question 13. Under Massachusetts law, as an agent of the insurer, a life insurance producer has the authority to A. Alter coverage amounts without prior insurer approval. B. Set premium rates below those filed by the insurer. C. Bind coverage pending formal insurer approval. D. Waive policy provisions at the time of delivery. The correct answer is C. A producer's binding authority allows temporary coverage until insurer underwriting completes approval, but rate setting, policy alteration, and waivers require insurer authorization. Reason A is not correct. Changing coverage amounts without approval exceeds a producer's authority and requires insurer underwriting consent. Reason B is not correct. Setting premiums below filed rates falls under the insurer's rate-making function, not the producer's agency role. Reason D is not correct. Waiving contract provisions requires insurer approval, as producers cannot unilaterally modify policy terms. Question 14. A life insurance producer's appointment agreement does not explicitly authorize the issuance of temporary binders. After collecting the first premium, the producer issues a binder receipt promising immediate coverage, which the insurer later refuses to honor. Under which form of authority did the producer act when issuing the binder? A. Express authority, which relies solely on powers explicitly stated in the agency contract. B. Apparent authority, arising when the principal's conduct leads a third party to believe the agent has binding power. C. Implied authority, Inferred from tasks necessary to carry out the producer's duties under the agreement. D. Agency by estoppel, preventing the principal from denying an agent's power when it induced third-party reliance. The correct answer is C. The correct answer is implied authority because it allows a producer to perform tasks reasonably necessary to fulfill responsibilities under the agency agreement, even if not expressly granted. Reason A is not correct. The contract lacks any express provision for binder issuance, so powers not expressly granted do not apply. Reason B is not correct. There's no evidence that the insurer's conduct led the applicant to reasonably believe the producer could bind coverage. Reason D is not correct. Agency by estoppel requires principal conduct that induces reliance, which isn't shown in this scenario. Question 15. Under Massachusetts law, which of the following best describes the insurable interest requirement at the inception of a life insurance policy? A. Must exist when the applicant applies, regardless of issuance date. B. Must remain in force at claim time, even if absent at issuance. C. Must be present at policy issuance and stem from a valid economic or close blood relationship. D. May be based on any future expectancy of financial gain. The correct answer is C. Insurable interest must exist at the time the policy is issued and derive from an economic stake or recognized blood relationship. Reason A is not correct. Insurable interest must exist not just at application but specifically at policy issuance. Reason B is not correct. The requirement focuses on the moment of issuance, not on maintaining interest at claim time. Reason D is not correct. Future expectancy of gain without an existing economic or blood tie does not satisfy legal insurable interest. Question 16. In Massachusetts, when does insurable interest between spouses or domestic partners exist for life insurance purposes? A. Only during periods of cohabitation as spouses or partners. B. Throughout a valid marriage or domestic partnership, ending upon legal dissolution. C. Indefinitely, even after divorce if beneficiary designation remains unchanged. D. Only if one is listed as a beneficiary on the policy application. The correct answer is B. Insurable interest between spouses or domestic partners exists for the duration of the legal relationship and ceases when it is formally dissolved. Reason A is not correct. Legal insurable interest is not tied solely to cohabitation, but to the formal marital or partnership status. Reason C is not correct. The legal interest ends upon dissolution regardless of beneficiary designation. Reason D is not correct. Beneficiary listing does not create or extend insurable interest under state law. Question 17. Midtown Manufacturing purchases a life insurance policy on its CFO, names itself as owner and beneficiary, and pays all premiums. Under Massachusetts law, the insurer must recognize the corporation's insurable interest based on which of the following? A. The CFO's annual salary amount. B. The insurer's projected profit margin. C. The CFO's consent to the policy. D. The anticipated financial loss from the CFO's death. The correct answer is D. This option is correct because insurable interest in key employee policies is determined by the potential financial harm the business would suffer if the employee died. Reason A is not correct. Annual salary alone does not quantify how much economic loss the business would incur from the CFO's death. Reason B is not correct. The insurer's profit expectations have no bearing on the existence of insurable interest. Reason C is not correct. Consent of the insured is required for validity but does not establish insurable interest. Question 18. Sarah takes out a life insurance policy on her neighbor without any business, familial, or creditor relationship. Upon filing a claim after her neighbor's death, the insurer will most likely do which of the following? A. Declare the contract void ab initio and refund premiums. B. Pay the full death benefit amount. C. Honor the claim if beneficiary designation is valid. D. Charge a contractual penalty and pay half the benefit. The correct answer is A. This option is correct because a life insurance contract issued without insurable interest is void from inception, entitling the applicant only to a return of paid premiums. Reason B is not correct. Paying the death benefit would contradict the statutory requirement for insurable interest at policy inception. Reason C is not correct. Valid beneficiary designation cannot save a contract that was void for lack of insurable interest. Reason D is not correct. Massachusetts law does not impose a penalty and pay partial benefit for contracts void due to no insurable interest. Question 19. Which of the following transactions falls within the scope of the Massachusetts Life Settlement Act? A. Sale of an in-force life insurance policy to an affiliate for corporate succession planning. B. Purchase of a new life insurance policy by a revocable trust for estate planning purposes. C. Transfer of an existing life insurance policy to an independent investor in exchange for cash. D. Assignment of a life insurance policy as collateral to secure a bank loan. The correct answer is C. The Massachusetts Life Settlement Act governs life settlements, which are transactions where a policy owner sells or assigns an existing policy to a third-party investor for compensation. Transfers for collateral or internal estate planning do not qualify as life settlements under the Act. Reason A is not correct. An affiliate sale for succession planning is an internal corporate transfer, not a third-party life settlement. Reason B is not correct. Purchasing a new policy creates new coverage and is not a life settlement of an existing policy. Reason D is not correct. Collateral assignments secure loans rather than involve the outright sale of a policy for cash. Question 20. Jackson, age 22, plans to apply for a life settlement broker license in Massachusetts. Under the Massachusetts Life Settlement Act, which of the following must Jackson complete before his license application can be approved? A. Obtain a $50,000 surety bond. B. Complete at least 20 hours of pre-licensing training approved by the insurance commissioner. C. Demonstrate 3 years of prior life insurance sales experience. D. Submit proof of at least 12 continuing education hours annually. The correct answer is B. The correct answer is that Massachusetts requires prospective life settlement brokers to complete at least 20 hours of pre-licensing training approved by the commissioner before their application can be approved. This ensures brokers understand state regulations and ethical standards before transacting business. Reason A is not correct. Massachusetts does not require a surety bond for life settlement broker licensing under the Life Settlement Act. Reason C is not correct. There is no experience prerequisite for becoming a life settlement broker in Massachusetts. Only approved training is required. Reason D is not correct. Continuing education requirements apply after licensure and are 8 hours every 2 years, not 12 hours annually. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.